Welcome to Monday's Market Outlook here at Top Gun Options. Matthew Buckley, the Chief Investment Strategist here at TGO. And after a huge macroeconomic data-driven week last week, a little quiet this week. On Monday, not too much. I'll be watching some China numbers, CPI and PPI coming out Monday night. Out of China. Tuesday's pretty quiet as well here in the United States. Wednesday, bond auction and our budget balance numbers there. Thursday, little pickup with core retail sales, weekly unemployment claims, and business inventories. And then Friday, some potentially market moving numbers out of China with industrial production early Friday morning. And then we'll see PPI, core PPI, and University of Michigan consumer sentiment. So not until the end of this week will we see anything really kind of move our markets. So based on that, I think we melt up, right? We had relatively good jobs numbers on Friday, but again, for all the good you find in the jobs numbers, I can find a hell of a lot of bad. Yeah, payrolls are back to just exactly where they were before the financial tsunami hit, but I got to tell you what, retail, services, restaurant, all that type of stuff. The jobs that have been created in this post-recession jobless recovery really aren't high-paying jobs that really aren't going to pull this economy out of the doldrums that we're in. So, a lot of people think that we are still in a recession. It feels like we're in a recession, but looking at the numbers, technically we're not. But that really doesn't give anybody any solace, right? It's very, very interesting because another reason that the market is kind of melting up here is one massive short squeeze. Look at the most shorted stocks recently, okay, and compared to the S&P 500. So there's kind of one massive short squeeze going on in this market. And you know who Whiz, let's take a look at the chart. Who's buying this market then? Let's take a look at a chart of the last 3 months. Look at the past since the middle of May. Look at that. That has just been, that is a rip your face off rally. And you know why? Who is buying the S&P 500 right now? The S&P 500. Look at this. Look at March of 2014. Share buybacks, folks. Companies are using these near zero interest rates and leveraging debt to the hilt and buying back their own shares. Folks, that can only go on for so long, okay? Companies need to innovate. They need to hire new products, new services, not just borrow money and buy their shares back. Yeah, the stock goes up a little bit, but eventually you run out of money and eventually you run out of shares to buy back too. So really don't see this as necessarily good news. It is what it is, okay? So I think we melt up this week until we start seeing some potential market moving economic data later in the week, okay? So I got to run. I'm actually flying up to New York. I'll be up in New York Monday through Friday. Having a lot of meetings for our hedge fund, our private offering, and going to be a great week up in New York. So I'll be doing all my live trading from up in New York in Macquarie's U.S. Equities headquarters, okay? So happy hunting. Make sure you hedge. I'll be back with Tuesday's sit rep here at Top Gun Options. We'll see you.